Naspers is next. Now, I said earlier, the attraction of it is that it's South African listed.
Yeah.
I mean, it's a huge market cap. It's 900 and something billion rands, which is about as big as you get. And we know that that is a big contributor to our index. Price to earnings ratio 87, although I've seen numbers sort of lower than that. It's quite hard to calculate. Dividend yield, though, on its rather paltry distributions, 0.24%.
Yeah, this is a growth company, so they're going to pay a little bit of a dividend, but they're not really serious about it. In terms of that PE, on a forward basis, you've got anything between 28 and 48 times, depending on which analyst you're looking at. On consensus, it's about 38 times. So it's not a cheap company, but there's a reason why everyone loves this company, and there's a reason why we love it too at FNB Securities.
Well, go ahead and tell us.
So the premise of our investment case is Tencent. So Naspers owns 35% in Chinese internet giant Tencent, which will probably
listed in Hong Kong. All good and well.
Yeah, they do the games. They've got WeChat. Everyone loves them. 52% of Chinese internet time is spent on Tencent. It's Naspers' crown jewel. But that 35% stake makes up 116% of Naspers' market cap, which means its stake in Tencent.
Now my head's spinning, because how can it be 116 of something?
So it means that the stake in Tencent is worth more than it's worth more than Naspers.
So that's stupid, because that doesn't make any sense. That means you're getting all the other bits for nothing, for less than nothing, for negative money.
Absolutely. They're basically saying that the entire Multichoice business, all the print media businesses, all these massive e-commerce businesses are worth less than zero. And we don't think it's worth less than zero. So we think the market is mispricing Naspers.
And sooner or later, somehow, that's going to work its way out, because Naspers is working to raise its global visibility in order to work the portfolio.
Yeah, and you can already see that happening. I mean, they recently sold Allegro, which was their Polish online classifieds business, for $3.5 billion. I think the market was kind of expecting them to sell it for $1 billion. And the valuation for that company was actually negative if you looked at Naspers' sum of the parts. So as these guys start spinning out and disposing of these more mature internet companies that they've built up from scratch, you're going to see that those valuations being realized.
Because we'll come back to Tencent, but if you just take things like Flipkart and Markafoni and some of the other big ones, those are all in aggregate, but like market leaders in either e-commerce or internet access or downloadable streaming content and stuff in their own markets. So it's absolutely crazy that those shouldn't be valued along the side with the other things.
Absolutely. And I mean, if you just look at the value of Multichoice on its own, because Patuminati, its BE shares are also
billions.
It's traded over the counter. It's worth like 18 billion rands.
So to come back to Tencent, look, China, we saw Xi Jinping at Davos speaking and sounding like the sort of enlightened global leader of the world, because we know other crazy things are happening. And we know, though, that the Chinese prevent some of the foreign internet companies from operating there. That just makes Tencent more valuable and stronger, doesn't it?
Yes, absolutely. And they already had that first mover advantage. WeChat, for example, is so entrenched in Chinese daily lives that Facebook isn't going to come there and suddenly take 90% market share.
Because its real strength, WeChat, isn't it, is that you load it with your credit card details in China, and then other app developers, you can use your WeChat account to pay for things like movie tickets, like flowers, like train and bus rides, and you can make deposits, and you can, of course, upgrade your avatar inside games and all of that stuff.
Yeah, I mean, it's just
tremendously strong business.
Yeah, it's just very.
Let's have a look at the share chart. So it got to 2,580 or something rands a share. No, 2,530 apparently, and that was sort of back there in the middle of 2016. Unfortunately, had quite a nasty slide. Went below 2,000. Has since, though, moved up a little bit. So are there short-term valuation issues? Is it just a sort of a emerging market sort of a thing going on?
Yeah, so there was actually some significant weakness in Tencent over that period.
Okay.
Just some general concerns over the Chinese consumer and all the rest of it.
Yeah.
But we don't think there's a concern. We don't think there's a problem with Tencent. We don't necessarily think that share is overvalued. At the least, it's fairly valued.
Yeah.
So from our perspective, we're still very comfortable.
And hot on this one, and that's why it's our largest holding in our hot stocks portfolio here in Rand account.